Good morning, everybody. Welcome to the Flow Show, Monday, the 8th of September. And we're right in the thick of things again. Some weekend news out of Japan that's got the market on the hop, particularly in yen. So we'll look at that shortly. Morning, Mr. K. How's your weekend?
Morning, Ryan. Morning, everybody. Yeah, the weekend was all right, mate. Not much to say apart from the weather not being great.
Yeah, no, we had a good Saturday. Went to Poole Harbour for a bit of paddle boarding and whatnot.
Oh, good.
And I managed to get sunburnt, so
Oh,
yeah,
really? Wow.
got the last of it in.
Hmm.
That'll be it. But yeah, anyway, we shall see what happens with the weather. Right, let's go and get stuck into things. Right, obviously Japan. Well, actually, no, I'm going to start in China. Not really news, but more confirmation that they've confirmed that they continue to buy gold. That's now 10 months on the trot, I believe, that they've been buying gold, and we had another break up into the 3600 level today, so that's ticking on very nicely after the break of that 34, high 34s, 35 area. Right, over to Japan. And a bit, I wouldn't call it a bombshell, but because it was sort of on the cards anyway, Ishiba has resigned as leader. It was going to come to a head today, one way or another, because there was potentially going to be moves to force a leadership vote. As we noted last week, Ishiba had threatened to dissolve Parliament rather than go through a leadership election, which would have meant that they would have headed for a general election, meaning he would have stayed in charge for that general election as a way of staying in. But whatever's happened over the weekend, he's now gone, which reduces the risk of dissolving Parliament and going to a general election. It means the can be kicked and the LDP can get its shit together over the next month or so, or next few weeks. The leadership contest is expected early October. I've seen the 4th touted, the 8th touted. We'll see when we get to final full confirmation. Now, the early runners for the leadership election, there's 2 who ran up against Ishiba last time. That was Sanai Takaichi and Shinjiro Koizumi. They both ran it against Ishiba last time. Now, Takaichi was the lady who was expected to well, and sorry, that was me squawk going off. She was expected as a bit of a surprise horse last time, and she did quite well. Though she didn't get through to the runoff, if I recall correctly. But she's in again, and also Chief Cabinet Secretary Hayashi has said he intends to run in the election as well. Now, Takaichi is seen as the most dovish amongst those who could be in there. So people are using that in Banker Japan connotations there. So she will be more negative for the yen than Koizumi, who's sort of middle of the party line, should we say. So lots to happen between now and that leadership contest. Okay, the 2 same runners in again. Could we get any other surprises? And will the market be that bothered? Depending on who comes in.
Takaichi is Abe version 2. So she's really if she would get it, she was in the runoff. By the way, she lost against Ishiba in that runoff. She would be seen as Abe version 2, so that would be negative yen, because that also would mean that she would be quite sided with all those parties, or going to get the help from the parties who are the most dovish in when they need to form a majority, right? But there's 4 or 5 of them who are probably going to run. There's Koizumi. He's the son of the prior prime minister. I think was in the 90s also. Koizumi. Um, yeah, he's been seen a bit of the middle of the road. But whatever happens, the LDP having lost the elections in both houses, they will always be running a minority government. So they will always need to find an extra support aside from their junior coalition party, New Komeito. So it's not going to change much. Where it could change, and then you can compare it a bit like having an issue with the debt ceiling, right, in the US. This is the situation we are in now. People can't do anything. There's Ishiba was planning to put an extra package in place. Even asked the ministers to formulate the package before the end of the week. But now he's thrown in the towel. That is not going to happen. There's no new decisions that can be made before the next election of the leader. And then it's even not sure that they will find a leader which convenes for which is convenient, who is convenient for everybody. And we may actually then go into snap elections. But that's just to add to the mess if that would happen. But yeah, we have to know that now in the month coming. Or let's say small month coming, unless they go earlier, because since he since he resigned, they won't have to go through all those meetings to decide whether to throw him out or not. So it may, I think they may want to speed up things a little bit. But anyway, I mean, they need to give time to all the candidates to come forward, and there's a potential of 5 or 6 coming forward, right? So that's going to be something we need to look out for. But I let's be honest, even if the yen has recovered of what it lost overnight, because the market went probably a little bit too dovish on the JGBs. But they're going to be stuck. So somewhere it can't be positive, right? It just cannot be positive. So after this round being done, I'm not sure whether it's going to be the dollar yen, but yen should somewhere remain on the defensive. Could be on the crosser side of things. But yeah, I mean, because they can't do anything right now. I think the planned MOF issuances and Bank of Japan purchases, they can still be kept on because they were already scheduled before, but it's all the new decisions can be taken. And that's perhaps also why the yen is not completely falling out of bed, because who says new package, new money, whatever, that may have watered down the yen a little bit, but and that's not going to come. So yeah, maybe that's the secondary reaction that we had after the first one.
Yeah, I should imagine whoever comes in is going to try and hit the voters to get them on side with maybe some packages as well. So even if we do get someone who's not towards fiscal easing, they're probably going to drum something up anyway, because it is politics and it is all about getting the voters back on side on the LDP. So we can expect that. But yeah, for the next couple of weeks, I can see the yen, particularly dollar yen, just swinging between what happens in Japan during the Asia session regarding the runners and riders and who's stepping forward and whatever. And then when we switch into, late European, early US session, we'll go back to trading the dollar side of things. So, yeah, I don't think, I don't think further yen weakness is out of the question. But if you're looking at something like dollar yen, you've got that on one side, and the other side, you've got how dovish the Fed is going to be in the run up to and over the FOMC. So, yeah, we had a bit of a reaction. We managed to close the gap, which will please gap traders. And here we are back in the middle pretty much. So, yeah, expect a bit of volatility moving forward, but it could be two-way from now. There was a bit of good news on the data front out of Japan. They saw their final GDP numbers coming in better than expected. For Q2, quarter on quarter, up 0.5%. Their annualized Q2 growth coming in at 2.2%, all better than expected. Although CapEx was a little bit softer than they expected in those numbers there, 0.6%, though private consumption was up a bit better. So GDP wise, another feather in the cap for the BOJK, but like we were always talking, they take two steps forward, one step back. They got the trade deal rubber stamp, they got those real wages, and then they get a political bomb dropped on them.
Yeah, you know what? I mean, I was ready to change my mind a little bit actually after today. If Ishiba would have been staying on, not getting enough votes to be kicked out, I was ready to say like, oh, maybe we are going into the surprise for the Bank of Japan, and they will hike this month. And well, I think we just he just shut the door on all of that, and I guess they won't do anything when politics are up in the air.
Yeah, absolutely. So we'll have to see what happens with that lot. Over in China, there was a bit of trade data out as well, with their trade balance surplus dropping a bit to 732 billion. As you can see from the exports and imports number there, exports were a little bit softer, missing expectations, and imports missed a great deal as well. This is August numbers. All this trade data is still facing some big waves from everything going on with tariffs and whatnot. Sticking with the data, we had German data, which industrial production actually went up more than expected to 1.3% month on month for July, beating the 1.1% expected. We also got trade balance data from there and a slower surplus than expected and down on last month too. As you can see, activity going into the negative on both fronts, exports and imports. Again, July numbers, pretty big numbers the month before. So again, all this trade noise, but still we're not seeing any real trends developing there. Not one I look at that much often, but Eurozone Sentex Investor Confidence Index took an absolute nosedive, down 9.2, was expected to improve to a less crappy minus 2.2. It actually got worse, and the reading in the report was very bearish. It said the new September data from the Sentex Economic Index dashes hopes of an economic recovery. Both the current situation and future expectations are deteriorating noticeably. This means that economic concerns are returning in full force. And in Germany in particular, the downward trend is intensifying once again. That's some fodder for the ECB to think about this week as well. Right, let's go over to the big data that we got last week, and really the cat amongst the pigeons as far as rate expectations go. NFP coming in at 22,000, missing expectations by 53,000. They also came in below what a lot of Fed members are seeing as the break-even rate for jobs. So we're below that. The unemployment rate went up to 4.3% as expected, although maybe that doesn't look as bad when you see that the participation rate went up to 62.3 as well. So if a worse number would have been a much higher unemployment rate with that participate rate going up, but we've been there or thereabouts, 4.3%. I think the three decimal place number last month was close to 4.3%, so not too much of a big jump there. Wages, that pulled back to 3.7% as expected, down from 3.9% prior. So we are starting to see a slow creep down in wage numbers there. In the breakdown, manufacturing payrolls dropped 12,000. Government payrolls dropped 16,000. The bulk of private payrolls make up the rest, came in at 38k. So market took that pretty dovishly for the Fed. We were starting to price around a 10% chance of a 50 BP cut. I still think a 50 basis point cut at September is an extreme event. I don't think that's going to happen at all. In amongst all that, we also saw the Canadian jobs numbers out, and that was a sucky minus 65.5. Not that many people were paying much attention to this data in light of the NFP stuff. Unemployment rate, that jumped up to 7.1%, 1 point more than expected. And that came as the participation rate went down. So that's a double negative for that unemployment rate, because if participation rate comes down, you can see the unemployment rate coming down as people are coming out of the jobs market. So double negative there for Canada, not looking good at all. On the revolving door, full-time dropped 6,000, but it had a big loss last month, and all the damage was done in the part-time employment, dropping nearly 60,000. So not good news in Canada. Canadian swap markets have now see a probability of a 90% chance of a September rate cut from the BOC. That was up from 75 pips before. Back to the Fed, Oxford Economics now expect the Fed to cut by 50 basis points, with the next cut coming in September. Barclays changed their view as well. They now see 3 Fed cuts coming in the rest of the year versus 2 previously. Okay, that jobs data. I'm going to make the less dovish case. It's still a positive number, and until we see negatives, the US could truck along if jobs numbers are positive, even if it's in the double digits.
Yeah, well, one could say that, but the thing is, it's the slowing of the jobs market that the market is trading, and we are running below averages, okay, and way below averages that we have seen before, and even migration included, which is going to have an impact and will and is having an impact, and will have a continuous impact. It's not enough to hold up the creation now. The creation of jobs, meaning that the economy needs a certain amount of job creations to just continue to balance the people who get out of the workforce as well. And I think that's what is now important. But beyond that. And it really comes down to that. Since the start of the year, since the start of Trump's tenure, really, it's a vote of confidence or no confidence, and I think that is really where we are reduced to now, and where the market is trading it as well now. Is that enough to drive an employment rate beyond the Fed's allowed range? Maybe not, right due to that inflation, right due to that migration. But then, are the migrants' jobs going to be replaced by people who are now on looking for jobs? That's the big question, because most of those jobs, let's face it, are jobs like we have here, the bus drivers and whatever those jobs that other people don't really want to do. So I think that's where the no confidence kind of vote comes from. But we've also seen that the market is not completely on board with selling dollars outright, because we could argue the dollar is lower than it was on Friday, but we're still in those broad ranges where we have been, because that's then the uncertainty which is still surrounding inflation. The thing is, if we would get an inflation dip on Thursday, then I think that the speculation will be much bigger versus the dollar going into the FOMC. But we should not get a lower inflation number according to all the calculations made, right? But I think it's more still coming back to a you promised us heaven, and we're not really getting out of hell right now. Towards the maybe the Trump administration right now, Ryan, more than just hanging our head to a couple of numbers. But I would make the dovish argument saying that the jobs market now is more important than inflation. So if it continues to deteriorate, it's probably going to push them to several rate cuts, and yeah, the dollar is not feeling too well about that.
Yeah, yeah, I agree. There's two fronts to look at this. Yeah, as you say with CPI and PPI, and that's what I said this morning as well. If we get soft numbers from those, then it's icing on the cake for a dovish FOMC. Then the market's going to get more dovish than it is now, because then, oh, this is just an inflation blip, and the Fed are going to embark on cuts. The other thing is, how far are the Fed going to cut to? Okay, if the economy is soft landing, if the jobs market is soft landing, we're at whatever the midpoint, what were we, 4.37%. Rates down at around 3%, maybe 275. Not that many cuts. If we get three the rest of the year, that's going to leave, maybe another 4 or 5 cuts, 25 BPs. So that's the first half of the year. And then the Fed might be at a neutral level. So it's not like we're cutting from, 5% to zero or anything like that. So it's going to be still a slow process. And the amount of cuts to get down to whatever neutral rate isn't that far to go. So if the market gets uber dovish, then that's something to look at. If people think rates are going back to zero, then they're probably going to be misguided. On the other side, and this is a point I was going to raise as well, all those immigrant jobs that are being emptied out will probably need to be replaced by US workers. Now, as you say, depending on what types of jobs US workers want to do, there's a reason why a lot of countries getting cheap immigrant labour is because the incumbent population doesn't want to do those jobs, but they may be forced into it. If they do, what's going to happen is you're going to see wages rising, because if firms need that workforce, they're going to have to pay up for it. They won't get away with paying minimum wage for a lot of those jobs. So we're going to potentially see further wage inflation coming into that. I mean, look at the case with the.
I rather think it's automation and AI, mate, who are going to replace a big part of those jobs there where they can be replaced. Obviously, there's
Yeah,
jobs where you can't replace the human input, but there where they
but
can, it's rather
look at the
another
South
push into
Korea.
automation, right?
Yeah, but look at the South Korea battery plant that's being built, where ICE went in and pretty much arrested 425 people who
Yeah.
haven't got the right visas. That's construction at the moment. AI isn't going to build anything at the right now, so those people will need to be replaced either by other people coming in on proper contracts, or by the local population. So there will be gaps to fill that can't be filled by automation or anything like that, and will have to be filled by US workers, whether they need to be trained up or whatever. So there is a possibility that you see this migration out of the jobs market replaced somewhat by US people coming in and taking those jobs. I don't know what level it will mean, but it just could mean, as I say, we just truck along at small positives for a few months, maybe the odd minor negative number, but who knows?
Yeah,
I just
but
don't. I don't see the
I
cliff
don't
edge yet.
disagree. I don't disagree on those replacements. I mean, really not. But the thing is, will they be able to replace them? That's another problem, because if you look at that Korean plant, most of them were Koreans
Yeah,
being arrested and deported. The Koreans did not really put a big percentage of American workers in there, but I think it's going to that may be a very long spun out process as well. are we going to be able to pinpoint all those replacements in the jobs as well? I mean, I'm just taking the example of those Koreans. I mean, it's 400 and whatever, 20, 30, 40 workers. In the job market, you're talking about hundreds of thousands, right?
Yeah, that's very true. But it depends how it's magnified across. I imagine there's plenty more foreign companies and whatever factories are employing foreign nationals at much cheaper rates. And the other side of it as well, without going too far into the political sphere, is the market may not have confidence in Trump because it's seeing a falling jobs market, but voters seeing all these foreign and illegals being outed means that they favour it, because if it means US workers getting those jobs, if you're a voter, you're going to be all for that. So it's a double sided coin, the market and the people on the ground. I mean, but we'd have to ask our resident Yanks what they think about Trump's policies in that view. But anyway, we are at where we are at. The jobs market is slowing. The last couple of months have proved that. We've got these revisions tomorrow popping up. So, the market's going to get dovish until such time as the data changes and it goes the other way. But it's going to get very interesting, particularly for the September FOMC. Right, moving on to Fed heads. We've had Gauls Beast out. He loves coming out on a Friday. He says jobs growth is definitely below the break-even rate. No shit, Sherlock. It says hiring may be lower as a result of immigration. It says we'd be nervous if we started to see layoffs. It says the US still likely in a full employment space. And despite that jobs data, he's still undecided what he wants to do on the September decision. Economic advisor Hassett, speaking about the data, says we have to look at the whole portfolio of numbers. Giving the old rug brush there. It says expects jobs will be revised up. The housing sector is still a disappointment, and he's not concerned about the benchmark revisions, talking about jobs again. Sees a connection with jobs and immigration enforcement actions. Commerce Secretary Lutnick, speaking about the possible tariff court case, says Trump has all sorts of other authorities, says these big deals are going to stay. And also talking about the data, says US economic numbers will get better after staff changes. Treasury Secretary Bessent was out saying to safeguard the US economy's future and stability, the Fed must re-establish credibility as an independent institution. Says looking ahead, the Fed must scale back distortions it causes in the economy. Trump, he's been saying a lot of stuff as usual. He had another dig at Powell, too late Powell. He's also put Europe back in the crosshairs, talking about the Google fine that Europe slapped on the firm, saying the European Union must stop this practice against American companies immediately, all in capital letters as he truth bombed. OPEC Plus, finally, we got a decision what they were going to do on Sunday. They've agreed to raising production from October by 137 barrels per day, which is far less than the prior increases that they put in 300 odd, 500 odd thousand barrels per day at the last changes. But they have confirmed another increase. And Zelensky on the Russia stuff says that part of the secure guarantees that they're talking about will see the presence of thousands of foreign troops in Ukraine, which will go down like a lead balloon as far as Putin is concerned. Trump's patience already wearing thin again about lack of progress on that front. So heads up for anything coming from there. Right, that's it on the headline front. Unless you got anything else, Kay?
No. Well, I mean, for what's to come today, the French vote, that should be arriving somewhere towards the evening. It's sort of a done thing that Bayrou is going to to get ousted, unless there's a huge surprise and that he manages to get so many abstentions that he stays on. But that's a very, very big ask. It's kind of it just feels like he may have thought like, okay, I mean, that's it for me. Let's have a vote. Get me out of here so I can go on my holidays.
Yeah, be typical in the French way. But yeah, we do have that today, and it continues to be a mess in France. It's been a mess since Macron called that last election and lost it. He's going to continue to try and cling on. So I don't know where we go after that.
Funny people, the French.
As well.
Funny people, the French. I mean, they continuously vote somebody in, and the next day they are not happy about them anymore.
Yeah, exactly. I mean, I think the market's doing a bit of fingers in the ears, going no, and sort of half ignoring it.
Definitely.
But yeah, we never know. If we get a headline that he's out and there's all problems, then the euro might take notice. Anyway, let's look at the rest of the week. We've also got some big ticket numbers out, but the week after the NFPs can be relatively quiet. There's not a lot out today. We've got US consumer credit later on tomorrow. Not a lot out in the US or elsewhere. Wednesday, we get some CPI and PPI data from China, which I'll keep half an eye on because inflation's still not picking up there in any meaningful form, which could lead to the PBOC looking at further easing measures. A bit of a change this month for the US data. We're actually getting PPI before CPI. It's usually the other way around. So that might add some extra spice because PPI can be a bit more volatile and it's usually a bit of a follow-up after we've got that CPI data. So if we get a decent variation here, be it to the upside or the downside, it could create, as I say, a bit of funkiness ahead of the CPI data. Because if CPI data then goes in the opposite direction, it's going to undo what the PPI did, sort of thing. So that's coming out on Wednesday. Thursday, we get some PPI data out of Japan, and it's ECB day. No expectations for any rate changes, but like the Fed, it's a forecast meeting, updated forecast. So we'll get the latest musings on where they see inflation growth and everything else for the foreseeable. So that could have an impact on the euro, depending on where they see things like inflation. If they see inflation coming down markedly, that's going to insinuate further cuts to come, which will then spin it a bit dovish. You got any early thoughts for the ECB, Kay?
No, I think welcome back from holidays meeting. Probably the most important thing will be to see what kind of suntan Queen Sun has right now. And wow, always the major question will be whether De Guindos can say one word.
Yeah, I'll have the tan chart out nice and early on Thursday. I can tell you that one. And yeah, we'll see if De Guindos is back in the box again. And then after that, well, around about the same time as all that, we get the US CPI data. CPI is expected to come in 2 pips higher at I think 2.9% from 2.7% previously, though the core is expected to stay unchanged at 3.1%. This, as I say, is going to have big connotations for what happens at the September FOMC. If that CPI data comes in hot and just marginally hot, all it will do, it's not going to change a cut in September, I don't think, but it just might get the Fed from going too dovish in their forecasts for rates. So the dots at the FOMC are going to be probably the most important thing at that meeting. But anyway, CPI out, jobless claims. We'll see if that finally wants to do something. And then on Friday, not a lot out. We get some GDP data from the UK, so we'll be watching that, and industrial production. And that's about it. Michigan numbers later on in the US, and a quiet end to the week. So aside from all the political stuff going on data-wise, apart from those US numbers and a couple others, not too busy. Whew, right, let's get on to what's going on in price land. So we'll start at dollar yen. Yeah, we get higher, 40, 50, 60 pips, depending on what you're looking at. Had a minor push up, got to the highs in the 50s. We stayed within the range, basically. We've got this range going on. You can call it 146.80s, 148.80s, with the odd push through here and there. Still not ready to bust a move on this one. Though I would say that probably the Fed is going to outweigh what happens in Japan. I'm not saying we're not going to get swings in this pair if headlines drop in Japan, but I think the market's going to be looking at this one more from the dollar side of things. So I think rallies are probably there to be hit. As always, keep an eye on these bloody yields in the US. I did have this level down here. Not a major level, but we've messed around there before, down into this 410, 409s. We're under it. If we stay under it, that's going to keep the pressure on the dollar. Whether we're going to set up a new range, maybe have a test of that 4% level, and then maybe just set up a 4%, 420 range as opposed to a 420, 450 range, something like that. But just look at those levels now, 420s and this 409s. If we're staying below there, then the market is staying on the dovish side of things, and the dollar, particularly dollar yen, might follow that. So in terms of trading dollar yen, as I say, if yields, 10 yields are staying down here really low, then rallies in dollar yen are likely to be hit if they happen in Asia, and then we switch over towards the US session. So that's going to be something I'm going to keep an eye on this week as just a potential bit of scalping going on. For the euro, that's not doing an awful lot. We're knocking up with, we are looking at reasonably bullish. We had this 117.50 that we've messed around a bit before over the last couple of months. We have had times when it's broken and we've tried to hold it, but that's failed, and it becomes resistance again, and then messed around here, and then it's resistance again, and we struggle to get up. This pullback off the last move above there was pretty shallow, down to 117. So we've got a chance of having another look up here. And if we break another time pretty quickly, we've got some of this traffic around here, 117.90s, we probably are going to go and have a look at that prior highs around that 118. So keep an eye on that one. If we get up there and hold it, that could be a pretty decent longer double top that's formed up there. Conversely, given, as I say, what's going on with the market getting dovish on the Fed, if we get soft CPI, PPI data this week, we're probably through those 118s and running up to 119s, 120s, something like that. So it could be a bit of a watershed moment for the euro this week. What are your thoughts on that, Kay? Is there a possibility we have a rush to 120?
Yeah, maybe, as I said, maybe already today, I mean, I don't know. I mean, because it would come as such a surprise that Beirut survives it. That would mean, I guess, that would mean support for the euro, because that would be the surprise. And it's, you kind of, how would I say it? You can always buy dollars, of course. I mean, it's the market is not going one-way ticket, but I find it still very hard to buy dollars. So yes, I think it can push through, but again, we're still in those somewhere in those ranges, and I think it's pretty simple, I would say. If you get through 117.5 and you hold, it's probably going to get to push through this time. But yeah, I mean, it may have to wait, and it may have to wait until the PPI. ECB, I think, is going to be it should be a non-event because everybody is on hold over there. So yeah, it's all up to how the market will look at these jobs and inflation combination to fly through. I'm not going to buy it here and now because imagine we go up to 40, 50 again, fail again, and then you find yourself back at 117, the figure 116.80. All of that is still very, very possible right now, until we really break. But yeah, I agree. It's looking more beat than anything else. I'm for sure not going to counter it if it runs up. That's for sure.
Yeah, I think it's very dangerous. Well, it's not dangerous. You can always, make money on shorting this
Yeah,
one. But I
people
think
make money
it's
on 4 pips.
yeah, the path of least resistance right now is up. So if you are want to play in shorts, then you perhaps want to think about taking down your trading size, i.e. your risk. Don't let it run too far, because I think dip buys in this one are going to be prevalent in this. But I also think if the CPI is actually hot and we see a dollar going bid, I think that's probably a rally that the market will hit quite significantly.
Mm. Well, I was
So
thinking about Thursday actually, because even though ECB should be a snooze fest, it could end up being an interesting day, because imagine that Lagarde says something that takes the market into the opposite way it was trading before. We could actually get some decent opportunities on the combination of ECB and CPI, but there's still 3 days out. Still a lot of euros to flow through the North Sea.
and that's an interesting point as well, because the opposite can be true as well. If
Mm,
something's happened in the US data and the market shows a little move but doesn't continue it, that's probably the market sitting through the ECB just in case she says something that counteracts that. And then if she doesn't, you see the euro accelerate in whatever direction it's going to go. So let's say, for example, CPI comes in soft, and we don't see the euro rallying through the presser while other pairs are going. That's probably a surefire indication that it's going to play catch up after she's done and the market's over that risk. We've seen it time and time again where the euro can hold a bit, just because of any headline risk from Lagarde, and afterwards it goes on its merry way. So yeah, it's going to be an interesting Thursday, very much so. We'll be looking at that closely, of course. Right, quick one else, euro sterling. Oh, look, don't really look at that on a weekly chart, I can tell you, because it looks an absolute mess. Euro sterling, a bit like the euro, still looking fairly positive. We are trying to hold up the top of the zone again, which means that we could get another push to the 87s. Once again, I think if we get a move up there again, could be that we're going to go through. But until we are holding above 87, 86, 90, and more so trying to hold above this 87, 15, 20 area, it's going to be hard work seeing further upside. But I think if we do get a move that does hold, we're probably going to be pushing on at least to test those prior highs, 87, 40s, 50s. Aussie Kiwi shorts. My shorts are looking reasonable, I should say. It's still not looking very bearish. Still looking very bullish, in fact, on this one. But we've had this secondary high, which you could almost call it a double top. It's not a bearish looking top because this high was higher than this high. If you want a more bearish looking top, you need the secondary high to match or be lower than the first high. So this could just be a bit of a pullback like what we saw here, quite shallow, and then off it goes again. So a bit of a trend refresh, the same here. 111, 110, 90s is really the support around here. So if it does hold around here, and we go back to these highs again, we're probably going to push through it, and we'll be off to the next level up at 111, 70s, 80s. If it gets under here, we do have several smaller levels, 110, 70, 110, 50s before the bigger traffic zone down here at the 110s. So this is still looking bullish, but it's having a little pullback. If we do a move back up and it holds at or below this prior high, that will be more of a bearish looking top, and then maybe we're going to struggle to see further upside. So I'm still short. I'm short below 111. I'm short up at the 111.50s as well. So my average isn't too bad. and I'm happy to ride shorts further up as well. But this one might be moving a bit more into balance. We shall see. Right, okay, I'm going to slide it over, mate.
Let's look at the one that moves the most and the most powerful, okay? Gold.
Hello, mate, you're mute.
Sorry about that, guys.
Right,
yeah, so I was saying, let's have a look at the one that is really moving the most and the more. Oh, it's actually taken another $6 since we started the show, $7 even. There's not a lot that's stopping it now because we had two additional reasons to buy it. The one, of course, being the most important is that U.S. jobs reports slowing down, yields coming down, yields being dragged a bit lower across the board as well, but that was one reason to push it up. We could also argue that more political political mess this time in Japan, adding to what's happening in France, adding to what's happening across the globe, is also another factor to for Asians, maybe Japanese this time, to join the long gold train. Everybody's buying it, and really, it is still extremely big. And that adding to everything that we had already in the past on geopolitical side. The the next level really it's going in steps. We are now through that 3603, 03, 0203 here. Next one is waiting for us around 3643, and I don't know why, but I had a kind of a target and it disappeared around 3655. Is it that width or this width? No, this width here is more going to take us right into 37. But really, as we can see, for as long as we are above 3500 basically, which is just that top over there, but even above those lows here, what I was saying already last week, 34 and a half, 34.20 or so, it's still extremely bullish, but it's just adding. There's for me no reason to stand in front of this train. I bought it again on the US jobs report on Friday, as usual. Been trading it around a little bit, let some go around here and just a little while ago. But yeah, there is nothing to stop this train. And the first maybe small level to the downside may be somewhere around 35.45ish or so. But really, I mean, there's plenty of levels to show up now. And the physical gold market is beat. The futures are beat. It's still an ongoing story. Um, the yeah, the next level, as I said, 3640s, 37s. In the 37s, there we could say if you look at it on a pure technical basis, this height here of the triangle will probably come somewhere to completion around there. So somewhere in the 37s, but it's just trying to stick the tail on the donkey, right? Trying to find the top right now. I really think we need to look at where it can be coming, or where this rally could be a bit at risk. It's probably around 35.80 we need to look at, but then also, which is the prior high, but then also, as I said, 35.40, and then the 35s. For as long as we are above there, it's really, even if we would see a bit of a setback, for as long as we don't have are taking away reasons why the market should be buying gold. The only thing that is going to provoke a setback here is really positioning. When the market goes too fast, one side, we have seen those kind of setbacks. not since we started again into the 33s, really. We have seen one here. That was that Chinese comment that we had the last Monday. Was it last Monday? Last Tuesday, Wednesday or so. That Chinese comments that we had, but still just even above 3,500, it was already bought. And as I said, the conditions for it to continue to rally are all still in place. Yes, Bran, if you find the good levels, probably around 35.80 already, we may find some bits if you want to buy it. Silver is a different play, okay? Even if now we are getting close to that prior high again. 41, 50, 60, we need a confirmation to get through. It requires different conditions, conditions that I have been speaking about so often already on all the shows. It requires different conditions, since it's an industrial currency, you can make up your own mind which kind of conditions that should be in place to continue silver, to put it as high as gold is going to be. They could be in place. It's probably going to continue to push, but it will require more work, in my opinion, for silver to really push through. For the time being, the instrument of choice still seems to be gold. But here, if you want to stick a price on it, 40 the figure, that's where it's probably going to, on setbacks now, going to find initial buyers. Only under 39.5 should we get a little worried about what's going on here right now. But again, I think a bit more work required to really break above 41, 55, 60 right now. And then cable, and I'm looking at the clock, it's going to be a short one. We are still in the range, and we are still a bit struggling, even though we pushed, yes, 135.55, a little higher than here, a little higher than here. It's still hesitating, right? It's very hesitant. Really, this needs to go 134.5 really, or 135.40, 45 really, hold, and then we can push up to 135.95, and which is still going to be the gateway to 136.5. But we are not there yet, okay? So I would really respect those ranges right now. We don't have, as Ryan already mentioned, we don't have much coming out on the data front. It's probably going to be a bit politics again. If we hear whatever Reeves or the new staff want to do, that's going to drag sterling around. And but most of the moves that we should see between now and the end of the week in sterling is going to be dollar driven. Support around 134.85. That's the one that held after those data that we had last Friday on the US jobs report. That's your first level, and then 134. 65, 60, 65 here. That's going to be another support if the dollar would crawl some back, but that's going to be again somewhere middle of the range. In the meantime, I would still say respect the top end of the range. I'm not in a rush to really buy cable personally. And with that, Ryan, looking at the clock, back over to you, mate.
Thank you, sir. Good stuff as always. We're all ready to rock and roll this week, so we've got you prepped for that. Thanks everybody for coming to the Flow Show. Do join us later on Face. Otherwise, we will see you nice and early tomorrow. Have a good day, everybody.